Thank you and welcome, Mark Newton. This is the month of September. This is our monthly technical analysis call. And I want to thank you, as always, for your support and for joining. As always, this is a call that really is about what you want to hear about. And so I would encourage you to go to the FS Insights /technical strategy page and upvote your choices. And that will make it easy for us to be able to talk about exactly those names that we want to do. So initially, I'm going to talk about markets a little bit because I think the next time that we speak next month, there's going to be a lot of volatility. And I think most of that, honestly, is going to be on the upside, which is probably a welcome change for many. We have been trending down very sharply since the middle part of August. And as of about next week, October the 4th to the 7th, there's a lot of time-based cycles that come into play that suggest that markets should be in the process of bottoming out. A lot is going to depend on how strong the rally is off the lows and what participates and what shape it takes, whether it's a three-wave bounce or whether it's a five-wave. That will give us a lot more input as to really how to view markets heading into next year. But initially, I do expect that we're entering a time when markets are going to do a lot better. And it could be a choppy October. I think we'll bottom next week, rally for 2-3 weeks, and we might have to pull back into late October, but I think November and December are going to be a lot more positive. So I have two different cycle composites. One bottoms next week, the other one bottoms officially in late October. Both go higher into year end. So as I've talked about in the daily notes, factors such as sentiment have gotten extraordinarily bearish. Momentum and breadth have really been crushed of late. We have only 2% of stocks right now above their 20 and 50-day moving averages for S&P. That is obviously very, very low. So October historically has been a bear killer type month. We have a rapid decline in October. People get scared, and that is precisely when stocks have the potential to bottom, really in absence of any bullish fundamental news or the fact that anything materially has changed. It's just the selling really starts to dry up on the downside. And I think that today is interesting. We are at now 3-day highs, but it's a little bit early, and one can't really rule out a pullback. If you take a look at an hourly chart of just where we are, I think this helps to really put things into perspective just by looking at the futures market and looking that really we haven't made all that much broader progress. That the rally really since 36.18, we're up 116 points just since overnight lows, but yet we haven't really shown much evidence of truly bottoming just yet. Now, the fact that we get up above these prior waves, that does look interesting to me, but I want to really wait until my time frame. I am more constructive. I did advocate really cutting shorts and starting to put on longs. I'm going to be coming out with a list of longs next week, which I hope you'll pay attention to, and it might be of interest to you. So without further ado, I'll just mention that the key catalyst for why stocks should really start to turn down or turn up is all about treasury yields starting to turn down and roll over. And so we really want to see treasury yields break. And a lot of the DeMark tools, a lot of the cycles show yields to be rolling over between now and year end. So I think that is interesting and directly could be important as to why we see a stock market bottom. Let's go to a few of the different tickers. One, of course, is QQQ, which is always very popular. My thinking is this is really ripe to bounce pretty sharply in October. As of now, we really don't have much to go on to say that that's happened yet, but I do like really being long and looking to try to sell into strength over the next 3 or 4 weeks on any bounce. And I think that any sort of pullback likely we get to really a maximum of right near 269 at a max, potentially down as far as 265, but I'm not certain that we're going to get that far down. So it does look to be getting very, very close to a meaningful low. NVIDIA is one of the top semiconductor names and the top names anywhere that was mentioned and voted by you. And so this has really been under a lot of pressure of late. And I just have to tell you that this stock has gotten a lot weaker technically because it did break July lows. And for those that are looking for semi exposure, there are other stocks that I would advocate being long, and we'll talk about those in a minute. But for now, this is close to bottoming in my view. We've gone from 340 to, below a 50% absolute retracement initially, which happened really right back in May. And we've come down even further, down to the low 120s. So I do think there's an opportunity for this to rally next month. I think that in general, this is going to be the first real area of importance. Is up near 155, and that adjoins a larger trend line just since April. So, we need to see some evidence that this truly has bottomed. And until we see that, it's really going to be the case of trying to sell strength. And I would also mention that, recouping prior lows, which I've talked about on this call before, always important. That's at 140. So that's really the first technical evidence that I would have that this is truly bottomed. And this takes about another 13 points higher from here. So we do need to accomplish a little bit. You say that did happen back on the 21st. We got up right to 140, was repelled. We closed out of the lows, and now we're trying to move to multi-day highs today. But this really needs to be exceeded, and then we can talk about upside targets once we start to break downtrend lines. While we're on the subject, I'll just give you a couple that I'm looking at that I think are better. One is ON Semiconductor ON. This is one of the strongest stocks in the space. Most of my fundamental colleagues love this name as well. So this has shown hardly any weakness whatsoever. You saw a push back from July up to all-time highs, minor consolidation. Now we're trying to turn up. So this is a lot more attractive for those wishing to play the semi space, and I would encourage people to take a close look at that. The other one is just AMD, and that one, of course, also really has started to deteriorate pretty badly in the last few weeks. And so this has really joined NVIDIA in breaking July lows. So for, AMD, the first level is going to be 7160. That really needs to be exceeded. From there, we can make a case of a bounce up to the low to mid 80s. And we'll see the timetable for that. But, first things first, we need to show evidence that it's bottomed. Right now, we don't have that. Stock is very weak, attempting to make a small rally today, but it's really inconclusive until we see more evidence of that. Let's go back to Tesla for a little bit. Tesla, as many know, has been in an ongoing range-bound consolidation really since last fall. And so the highs of this, and excuse me, by the way, I've got a cold, a lot of travel, and the change of the seasons has affected me. So appreciate your patience on that. So this is really the first key level is going to be these consolidation highs right near August. That's at 307, 308. The ability to get above that would be our first real technical positive. This can start to turn up and hit really 335, 340 area. What we don't want to see happen is this to turn down and actually undercut 265. That would be a technical negative. If 265 is breached, particularly on a weekly close, that suggests that this has another leg down, and this could potentially get down to 230, 220. I'm not expecting that happens. I'm thinking we're very, very close to bottoming. And, recent deterioration really has not caused all that much weakness in Tesla. You notice where May, June lows were, that's right near 210. And we're well above that by, 30%. So I think that's a good sign of showing strength while the broader market really has been weakening. And so right now, range bound, bullish bias for October. Really need to see evidence of the bigger picture to see this stock make moves like it has, say, from, in 2021 when it went from 188 to 400 and literally doubled. We need to see larger structural resistance broken of this entire pattern since 2021. And so that means initially breaking out above 340, and that's going to take time. Apple has, they announced some news today. The stock was down pretty sharply, and recently, intraday, the last couple of hours, it's begun to rebound. This remains a pretty attractive stock within technology. It's really difficult to fade this stock, and owning tech, this has to be one that one includes in your portfolio. Tech, of course, is still out of favor right now, but Apple, as you can see, has shown little to no weakness. We fell about 10 to 15% off its December highs and really barely retraced even a third of what the stock did from, here's a 382 Fibonacci retracement hit almost to the nose back on June the 13th. And so, many of these other stocks have gone down 50, 70, 80%. It's always a great sign when a stock can be resilient and hold up towards the upper quartile of its range while the stock market is showing a substantial decline. And given that, Apple still maintains a very big percentage in both S&P and the Qs. Certainly something to watch. I like the stock for rallies in October. This is going to be the first, meaningful sign that this is starting to make progress. First of all, as you know, with my work, we need to see downtrends broken. So for me, that's a move above 155. That's your first step. Once that happens, you can start to set sights on, maybe this moves to 170, 175. Similar to Tesla, it's got a very similar longer-term area of range-bound consolidation, and that's going to need to be broken before we get too bullish on Apple's intermediate-term prospects. For now, it's just going to be a short-term rally, and actually there's no sign that this is done going down based on today's reversal. Very well could have a final flush. You just take a look at hourly charts and see that, literally this is rallied right back to levels that, really could be important. And so, we need to see more. We need to see this fill the gap from earlier as of yesterday and really start to show evidence of trying to improve a little bit. And for now, it still looks early. Devon Energy. And so energy, I think, is close to bottoming. That should be encouraging for many people. I do still feel like crude has one final move to the downside. They can get down to potentially anywhere from $69 to $72 in WTI. So that would seem to be probably pretty negative for energy. You notice that a lot of energy stocks really have the same formation. They peaked out when crude did really back in early part of the summer, late spring. They made a secondary peak in August, and they've really been under pressure ever since. And that's because WTI has really been under pressure. But largely, these are triangle formations. They're not really all that negative. We really need to see a break of really 49 to have real concern about Devon. And so I like buying dips in this. I'm just not certain that they're done. If crude is going to go to the low 70s, I don't think it's bottomed yet. This probably does find some resistance on this gap fill right near 63. Right now it's 59. So over the next day, it probably stalls, turns down. This looks like the start of a 5-wave decline with a gap in wave 3. So any sort of rally here likely is still going to lead down one final time to the mid energy. So I think it's a little bit early in the short term. Overall, though, I do like the structure. It's held where it's needed to. One wants to really buy any sort of weakness into October if given the chance. Amazon, over the last few years, you've seen how the stock has moved up so substantially, and then that really abruptly stopped. But, the weakness really held where it needed to. It did not really break longer term trend lines. When you look at just trends from 15 lows last 7 years, we actually pulled back right down near 100, have bounced. Now we pull back. This is going to be the key level for Amazon on the downside. That's a really important level for stops. It's going to be the 100 to 101 level whenever it's hit. I do like this as a risk reward over the next 3 months, heading into year end. I think the stock is going to rally. My thinking is that similar with other stocks, first things first, we need to really show evidence of breaking downtrends, getting back up above prior lows. That's at 123.66. First things first. When this area is exceeded, one can make larger projections over where really Amazon should go. But my thinking is it probably gets up to levels near 140, 145 into October. That's a huge move. That would also be something initially to sell into. And, more needs to happen to have faith in this in the short run. But intermediate term, similar to Devon, stock remains in great shape, needs to consolidate a bit, then it's going to likely start to turn higher. XLE, similar chart as Devon. As I mentioned, most of the energy stocks remain in intermediate term uptrends. No difference here. This is pullback area of trendline support. It's going to be important for us to hold 68.66. That's a large trend. Anything under that would lead it down to 65.5. Meanwhile, the ability to exceed its gap fill, meaning recouping $76, would be the first encouraging sign and allow this to move to the low to mid 80s. Google. So similar to Microsoft, this has been really, really weak since the month of August. We've pulled back under May lows to the lowest levels really since the early part of last spring. We are getting close to a level where I do think this is bottoming. If you look at a longer term chart of this, we've officially, fallen under the 50% retracement level of the entire move up since 2020. So anything down in the low 90s, and we're at 100 now. Let's say the market gets one final flush into next week and this turns down. This would be a great stock to buy on weakness. I don't think it does get to 90, but I think that, any sort of further weakness, I'm going to be a buyer of Alphabet. And I think that this is, a stellar company, but the stock under obviously a lot of pressure and really needs to recoup, 102 initially to have faith, and the exact lows are 101.88. But in general, this is broken down. So trends are negative, and we need to show more evidence of bottoming right now. It does look compelling from a long-term perspective, but short-term, just not there just yet. I'll talk about 3 more stocks, so no need to add more tickers. If you want to talk about these things, just please go on, tell your fellow friends, clients that might be subscribers to get on and really put in a good word for the stocks you want to talk about. SOFI Technologies, really an interesting area to consider. This has really been beaten up badly, but you notice this has gotten down right down towards May lows, 495, so it's about 30 cents up. I think this is probably pretty close to buying. That should be a pretty good area of support. I don't mind owning this from a risk reward basis between now and year end, but I likely would really, hold off on getting too aggressive until we see technical improvement. And by that, I mean a move above 557 initially, and then a breakout of that downtrend. There's no reason to try to catch the bottom. First and foremost, the meat of the move is really where you truly make the money in stocks on the upside. And so it doesn't matter that you miss it. As the old saying goes, sometimes when the horse gets out of the barn, you got to chase it. And you want to have some conviction that these stocks are truly bottoming out. And so, I would own it in small size near prior lows, probably with a 475 stop. It got down to 482, and really try to play a bounce in that over the next couple months. VALE and PBR, the entire Latin American space could actually rebound pretty sharply if crude oil starts to stabilize in October and turns higher, and if the dollar turns lower. That would be great for emerging markets. And Brazil is actually showing a bit more strength than Mexico. So I do like Brazil. Vale needs to get up above $14 to really pique my interest. So you see prior lows that were made back here. That's at 1452. You see that first spike up into August, 1432. This entire area is pretty strong resistance. So this needs to be exceeded. So, not wrong to take a stab, but it's not really a compelling buy here just yet at 1277. It very well could go to 1250, 12, but I think we're closer to a level that one can position long, and really getting up above those prior areas I mentioned, 1430s or so, is going to be actually pretty good. PBR. So this has really been a struggle, but honestly, this is in much better shape than it was back in 2021. We've seen some pretty good rally off those lows, and the pullbacks have held where they needed to. And so that being, of course, July lows right near $11. Recent pullback also not a bad risk reward. I think it's going to be largely pretty range bound. I think it probably does get to 11.5. I think it probably gets briefly under 12, and that's your buy point. And then you really want to sell and move up to 13.5, probably 14. We'll see the extent of which this can break, just initial downtrends from August. That would give some confidence, and really any move above this consolidation, that's a huge buy signal overall. And you just see how this is lined up with prior peaks going back since 2018. So really an interesting intermediate term prospect, only because it's held in there. So not wrong to buy here, looking to sell up at overall 15.5, but anything above this consolidation means this can double. And I'm not saying that's going to be the case just now, but that is something to think about. And really, when I say good risk reward, it's only because this is at 1226, and we know things have changed if it gets under 1275. So you don't really have to risk that much to own it here. And you can play it for a bounce, and on an intermediate term basis, if it starts to show more and more strength, then that would be a much better signal. So thank you, everybody, for tuning in today. Thanks for your support, patronage, as always. Please get your picks in and upvote the stocks you like. My thinking is markets bottom in a week, and it's very close. And it could take the form of a couple-week rally into October, and then a minor pullback into late October. But I think the worst is behind us for now. Bigger picture, you'll have to tune in to the webcast in December and January, because I'm not certain we're out of the woods completely. I think that this would probably be the shortest bear market ever. And a lot of the wave structure is not compelling to think that we've made a substantial bottom just yet. But we're getting close to a good tradable bottom. And it means that, historically, October has been about a 1% up month in midterm election years, much better than normally, which is about 0.3%. And November, December historically are always very good. So a lot of it depends on, can we hold an October rally? Do rates roll over? Does the dollar roll over? Does that give us, and then we have to hope for some type of good news where the market respects that more than the earnings starting to come down, which is in mid-October. So if any hint of inflation getting better, I think it's October the 13th, that would be important. Any sort of stalemate in the war, which seems a little bit less likely right now, but that's important. If China goes off of its COVID zero and we see some evidence by the CCP and trying to do what it can to bolster these companies, any sort of resurgence in China will also be a good sign in terms of demand. That could positively affect crude for reasons why you wouldn't normally expect between supply and demand. So those are things to keep in the back of your mind. But I think we're headed to a better period over the next couple months. And, I'm not in the 3,200 camp. If we have a very, very mild rally between now and year end, then it does open up that possibility for early next year. But as I'll show in my cycle stuff next month, I think that next year should be a lot better year than this year. And the chance for weakness largely is going to be in the first 2 quarters. And then we should turn up pretty sharply as of the summer. So we might have another 6 to 9 months of a lot of choppiness, but I'm not a big bear. I'd rather use this bearish sentiment, oversold conditions, seasonal positives as a chance to cut shorts and buy, and be more of a tactical trader and load up on the things that I like. So I'll be providing a list of some of my favorite longs next week. And thank you for tuning in as always. Have a great day, everybody. Take care.